In December 2003, auditors working for a small firm in Milan received a letter. It was printed on Bank of America letterhead, and it confirmed that an Italian milk company had nearly 4 billion euros sitting in a Cayman Islands bank account. Bank of America later confirmed the document was a total fake. The signature was forged. The account never existed. The money was never there. Within 6 days of that single forgery being exposed, the company completely collapsed. It became the largest corporate bankruptcy in European history, wiping out the life savings of 30,000 everyday investors. The crash exposed a highly engineered financial illusion that had been running undetected for 13 years. To see how the deception started, we have to go back to 1961. Callisto Tanzi was 22 years old when he dropped out of university to take over his family's small food operation in northern Italy. He registered a new dairy business and called it Parmalat. His success was built on a genuinely useful product, long-life milk. By heating the milk to kill bacteria and sealing it in a carton, it could sit on a shelf for months. In the 1960s, parts of Italy still had highly unreliable refrigeration, so a carton of milk that didn't need a fridge was a massive breakthrough for ordinary households. The business grew quickly. By the 1990s, Parmalat was operating in 30 different countries, with 36,000 employees. They were buying up food brands, football clubs, and even putting their name on Formula One racing cars. The Italian government awarded Tanzi the Cavaliere del Lavoro, declaring him a national economic hero. He built something tangible, a physical, globally respected food empire. But rapid global expansion costs money. Parmalat was borrowing heavily to buy everything in sight, and many of those purchases failed. Tanzi spent 130 million euros on a television network, only to sell it shortly after and eat a 100 million euro loss. Hidden debt from these failed global acquisitions began secretly poisoning the company's healthy physical balance sheet. By 1990, Tanzi faced a choice. He could admit the failure, restructure, and accept a smaller version of his ambitions. Or he could hide the debt and keep borrowing. He chose to hide. To keep the loans flowing, his team used a subsidiary holding company called Bonlat Financing Corporation, registered entirely offshore in the Cayman Islands. When Parmalat incurred unexplainable losses, they transferred those liabilities off their balance sheet, burying them inside the isolated Bonlat account. To hide these disappearing liabilities, they manufactured fake assets, like that 4 billion euro bank account, making the books appear healthy enough to keep borrowing. The cover-ups were brazen. At one point, Bonlat generated fake revenue by claiming to sell a massive volume of powdered milk to Cuba. It was a volume so high that, if true, it would have produced 55 gallons of milk for every single person on the island. Yet the global financial system let it happen. Auditors kept signing off. Major banks helped structure complex deals, including one with Citigroup that Parmalat literally named Buco Nero, the Italian word for black hole. With the help of these institutions, Parmalat sold 8 billion euros worth of bonds to everyday savers who believed the assets were real. The fraud survived for 13 years because the entire financial ecosystem was highly incentivized not to look too closely. The system finally broke in November 2003. A new auditing firm refused to sign off on Parmalat's half-yearly statements, questioning a suspicious financial gain claimed by the Cayman subsidiary. That hesitation triggered a massive unraveling. Weeks later, Bank of America confirmed the 4 billion euro letter was a forgery. Parmalat was forced to publicly admit the cash had never existed. The stock price collapsed to zero. On Christmas Eve, Europe's largest dairy business filed for bankruptcy. When authorities finally arrested Tanzi, they found records of more than 8 billion euros in hidden transactions stored directly on his personal computer. He had meticulously documented his own fraud. The investigation uncovered something else: 19 hidden masterworks by painters like Picasso and Monet, stashed at the homes of Tanzi's friends. Tanzi had denied owning any of them. The billionaire faking corporate assets was concurrently hiding a 100 million euro personal art collection. Parmalat collapsed under the weight of a founder's psychology and ego, a failure far deeper than simple corporate oversight. In 1990, Parmalat's debt was a solvable problem if Tanzi had been willing to restructure and accept a smaller empire. His decision to invent fake assets effectively murdered the real dairy business, replacing it with a paper ghost. The original product was real and useful. The Tansy spent 13 years running an empty performance, and 30,000 investors paid the ultimate price just to sit in the audience.